Hello everyone, good morning, good evening, good afternoon, in whichever time you are listening to this video. So hope that you are doing well. I am also very good. So in our earlier video, we have discussed about the basics of the auditing, the meaning of audit, users of financial statements, and then we have discussed why audit has to be conducted, and then the elements of an audit engagement, right? Assurance engagement. So there are 5 elements, right? So we have already completed it. So let us go further in our discussion now. Okay. Now see, coming to the various types of works that the accountants would be doing are assurance engagements. Means various types of works that they can undertake. So one has become your assurance engagement. So under this assurance engagement, so we are having audit engagement, and then we are having assurance, or we can also say it as a verification of forecast, and we have review. And coming to other engagements, other services. Now listen, see, in assurance engagements, so first the person who is verifying those financial statements, he should first get the assurance, and then he can express it as an audit report. It is an as a report, not audit report. It may be audit or review or anything. So in assurance engagement, two things happens. First, the person should be verifying some data, and after verifying, he should be in a position to express an opinion on that data, which means if the professional is undertaking these services, then he would be expressing opinion. So which means here he would be giving a report, right? So which means here he would be giving a report. So always remember, in these 3 types of services, at the end report is involved. But here in case of other services, no report involved. Okay, which means here no expressing opinion on financial statements will happen. Always remember this. Okay. So now let us continue the discussion over this. The first one is audit. Already we have discussed about audit. So audit means independent examination of financial statements of an entity. Okay, and this is done at the end of the year, means for a period of 12 months it is done. So you should understand the meaning of all these type of services, otherwise you may not be in a position to figure out which service what will happen, in which service what is going to happen. So in audit, what happens, there will be financial statements, and financial statements will be for 12 months, and the financial statements would be verified, which means here sufficient appropriate audit evidence has to be obtained whether the financial statements are free from material misstatements or not. Here full audit procedures, everything can be performed here, right? And next comes your assurance engagement. Okay, see what happens in this assurance engagement is, let us say a company goes to a bank and asks for a loan. Then the bank would ask the company approach the bank. Now bank would ask the company to prepare forecasted financial statements, or they are also called as projected financial statements, right? Have you all understood this? Here projected financial statements are prepared, which means if the company takes the loan, how the company would be utilizing that loan, and how it will change the profits, how it is going to change the balance sheet, profit and loss account. So that forecast will be for 4 years, 5 years, 8 years, 10 years, as per the requirement of the bank it would be asking. Now verification of these forecasted financial statements comes under assurance engagements. Have you all understood this? Now see, in these type of engagements, do you think that here the verification of the amounts that is there in the forecasted data is possible? The answer is no. Why? Because the projected financial statement contains the future data. Okay, projected financial statements contains what? Future data. So how anybody can verify the accuracy of the future data? But what can be verified here? whenever the company will be preparing this future data, forecasted data or projected data, don't you think that they would be using some assumptions based upon which they will be predicting the future performance of the organization? So here auditor is going to means we won't use the word called as auditor, we can say as practitioner, right? I already told you that only in case of audit we use the word auditor. In case of assurance and review we use the word called as practitioner. Okay, yeah. So we are discussing about assurance engagements, right? Assurance engagements. See here, engagement means works which are accepted by the practitioner. Engagement means not the ring ceremony engagement. So in assurance engagement, I have given an example of a company so approaching a bank for the loan, but bank is asking that first you get your forecasted financial statements or projected financial statements. So projected financial statements will be prepared by whom? By management only. And management will be preparing this by using what? Assumptions. Assumptions about the future viability of their business. Now the practitioner is going to verify whether these assumptions are reasonable or not. Okay, the assumptions under which the projected financial statements are prepared should be reasonable. Reasonable means it should be in a position to achievable. Okay, so here the basic aim of the assurance engagement is to verify the underlying assumptions based upon which the projected financial statements are prepared. Now in this case, do you think that here assurance means what we can say reasonable assurance can be obtained? The answer is no, reasonable assurance cannot be given. Okay, limited assurance only will be given. Okay, so that is what about our assurance engagements. Next we'll discuss about review engagements. We'll discuss about review engagements. See, review engagement means, so as we know that listed companies should file their financial statements to the stock exchanges, right? So in UK what happens is for every 6 months they need to file the financial statements with the stock exchange. Okay, companies need to file the financial statements with the stock exchange for 6 months. So in India for every 3 months, companies need to file their financial statements with SEBI. Okay, now before filing with the SEBI, here it is mandatory for the companies to get it verified by the practitioner. Okay, so the financial statements which are verified by the practitioner is called as a review engagement. Now why it is called as review engagement means full set of audit procedures cannot be obtained. Why? Because the data is not for a complete year, the data is only for 3 months. So in that case, how come entire audit procedures be implemented here? It's not possible, right? So limited time is there and limited procedures only can be performed, so it is called as a review engagement. Okay, so at the end, after doing the verification, here also report is given, which means here also opinion is given. So ultimately what is the moral of the story is, in case of audit, opinion is given. Yes, opinion is given, and the type of opinion here is given, means the type of assurance is given is reasonable assurance. But in case of review, here also opinion is given. Yes, opinion is given, but here limited opinion is given or limited assurance is given. In case of assurance engagement, here also opinion is given. Yes, here also opinion is given, but here also limited is given. Okay, see, one compared to audit, here the audit procedures will limit, and coming to review in assurance, the procedures are going to much more limit. So here whatever the reasonable assurance that we are going to give, see, reasonable assurance means high level of assurance but not absolute assurance. High level of assurance but not absolute assurance. High level of assurance means, yes, you are saying that yes, there are almost 99% correct but not 100% correct. Financial statements are 99% correct but not 100% correct. Okay, so such type of assurance is called as high level of assurance or reasonable assurance. But in review and assurance, reasonable assurance cannot be given, only limited assurance only can be given. Okay, have you understood this point? Remember this. And see, the last one is other services. So coming to other services, no opinion is given. Okay, no opinion is given here. Why? Because other services includes, for example, the compilation of financial statements, or valuation of any assets, or valuation of any investments. Okay, so these are not the assurance engagements. Here the auditor is not appointed to give any opinion on on any financial statements. All right, so here no opinion is given, only the work is done and then the work is submitted. So here no opinion is given. Have you all understood the difference between all these type of engagements that practitioner can be undertaken? And remember one point here. In case of this audit, auditor is called as, means the practitioner is called as auditor. And in case of this limited engagements is called as practitioner. Practitioner. And in case of other engagements is called as an accountant. Okay, you should use these words. When other services are performed, the professional is called as an accountant, and in case of audit is called as an auditor, and in case of review and assurance engagement is called as practitioner. Okay, please mind these words. Have you all understood this? Next we'll go to the most important topic, which is called as ISA 200. Okay, see, ISA 200, the name of the ISA 200 is overall objectives of an independent auditor and conduct of the audit in accordance with standards on auditing. This is the first standard, or we can say this is the mother standard for all the other standard, which says that audit has to be conducted. Okay, see, we are having the standards for audit engagements, assurance engagements, review engagements, and other services. For all these type of engagements we are having the standards, but at this level, at the skill level, we are only concerned with the auditing standards. So in auditing standards, the first standard is ISA 200, which talks about overall objectives of an independent auditor and conduct of the audit in accordance with standards on auditing. Now listen, under this standard, first part is determining the overall objectives of an auditor. See, what will be the overall objectives of an auditor? There are two objectives. The first one is to obtain reasonable assurance whether financial statements are free from material misstatements or not, and the second one is to express an opinion. Okay, so the first objective of the auditor is what? To obtain a reasonable assurance. See, listen, reasonable assurance means high level of assurance but not absolute assurance. I already said you that reasonable assurance means high level of assurance. Now listen, how this high level of assurance will be obtained by the auditor? Any ideas? Yes, so first and foremost, auditor need to plan and perform his audit, through which he would be gathering sufficient appropriate audit evidence, and those evidences only will tell the auditor whether the financial statements are free from material misstatements or they are not free from material misstatements. Okay, so please observe the words here. One is reasonable assurance, another one is free and from material misstatements. Okay, see, free means there are no misstatements. If there are misstatements, he need to say that yes, there are misstatements. If there are no misstatements, he need to say that there are no misstatements. And see here, free from material misstatements, not misstatements. Why? Because misstatements can be small mistakes also that are there in the financial statements. But auditor is not bothered about the small mistakes, but is bothered about the material misstatements, which means those misstatements which would impact the decision making of the users of financial statement. Such a type of misstatements auditor is concerned with. Okay, so first point is, if there are small misstatements, auditor can ignore it. If there are misstatements which would be impacting the users of financial statement, then he would be giving it in the audit report or mentioning that in the auditor's report. And now comes reasonable assurance. I already said you, reasonable assurance means high level of assurance but not absolute assurance. Now what is called as absolute assurance? It is 100%. Absolute assurance means 100%. Now tell me, can anybody give 100% assurance on financial statements? The answer is no. 100 assurance not. See, 100% assurance means you are saying that financial statements are fully correct, 100% correct. Can anybody say this? The answer is no, nobody can say this. Sir, why they can't say this? Why? Because there are inherent limitations to an audit. There are inherent limitations to an audit. Now, why these are called as inherent limitations? Why? Because whether I conduct the audit or you conduct the audit or even the ACCA president ACCA, the head of ACCA conducts the audit, the limitations are common for everyone. The limitations are common for everyone. Okay. That is the reason why only reasonable assurance can be obtained, and reasonable assurance only can be given. Absolute assurance cannot be obtained, absolute assurance cannot be given. Are we all clear up to this? We are all clear up to this? Right. The second objective is express an opinion, which means after you get the assurance on financial statement, you need to express that in the form of audit report. You can't keep inside, right? Or you can't tell every shareholder one by one. So you need to mention that in the audit report so that the persons who are using the financial statements will read and understand it. Okay, these are the overall objectives of an independent auditor. Now coming to inherent limitations, see, this is a very important point, inherent limitations. You need to mention in your answer saying that due to the inherent limitations of the audit, the auditor cannot obtain an absolute assurance, and that is the reason why reasonable assurance is only expressed in the auditor's report. Now listen, what are these inherent limitations? See, point number one, there may be inherent limitations in financial reporting process. Now tell me, in the financial statements, are there any estimates? Yes. For example, say life of the asset, salvage value. These are all estimates, right? Now estimates are determined by whom? Management. Do you think that exactly the life of the asset is only 5 years? Or exactly the amount of salvage value determined by the management is correct? No, they are all estimates. Okay. Similarly, we are having this provision for bad debts. Do you think that exactly you know how many debtors are going to default in the future? You don't know. But still, can you complete the financial statement without these assumptions or without these estimates? No, management cannot complete it. Okay. Now, when management themselves are saying that no, the financial statements, there are many estimates, many judgments. How can you say that they are 100% correct? It's not possible, right? Similarly, there is some inherent limitations in the audit also. Tell me, if you are given the audit of the Apple company, can you assure that you will verify each and every transaction? Is it practically possible? Impossible. If you want to audit the Amazon company, do you think that you can audit each and every transaction? You can't audit. It's not possible. We need to take sample. Without sampling, we can't complete the audit. Why? Because that much quantity of transactions will be there in such type of huge companies. Right? So that is the reason why there are some limitations even in the audit. We take sampling, we perform analytical procedures and try to do the projections, okay, which are not absolutely correct. Now, whenever whatever you are doing is absolutely not correct, how can you say that financial statements are fully free from material misstatements? It's not possible, right? Similarly, do you think that the management will disclose all the information to the auditor? There may be some information by knowingly or unknowingly the management may not disclose to the auditor. है ना? And do you think that the management has complied with all the laws and regulations? There may be certain laws which the management would have defaulted. Do you know that? Do you think that the company would definitely be continuing its business as a going concern? Maybe, we don't know. You have signed the audit report today. After 10 days, the company can be closed, isn't it? So, due to all these type of issues, it creates inherent limitations to the audit where the auditor cannot obtain absolute assurance. He can only obtain reasonable assurance. Have you understood these points? See, these points has to be written in the exam. Okay? You need to quote ISA 200 and then you need to specify that there are certain inherent limitations due to which auditor cannot obtain absolute assurance. Have you all understood this? Okay. Next. So these are all the points in this chapter. So I have covered everything. Objectives we have covered. And then see, another word is there here, true and fair. True and fair. True and fair. This is again very important. See, When we can call the financial statements are true and fair? Anybody? If I say that financial statements are true, showing true and fair view of the affairs of the company, what does it mean? It means that financial statements are prepared as per the accounting standards. It means that all the assets are accounted, all the liabilities are accounted. There is no undervaluation or overvaluation of any assets. Okay, there is a good internal control system inside the company, and all the transactions are recorded. There are no omissions, and all the laws and regulations has been complied while preparing the financial statements. Only if all these conditions are satisfied and no management bias, there is no management bias in making the judgments. So if all these points are present, then we say that financial statements are showing true and fair view of the affairs of the company. Okay, and then objectives of the auditor we have covered. And then need for external audit. Okay, need for external audit. Okay, I already discussed this in the earlier video where we said that users of financial statement. Okay, so shareholders, directors, and independent review is required. Financial statements to give a true and fair view. All this we have discussed. Next, what are the benefits of conducting an audit? Why an audit should be conducted? See, if the audit is conducted, then the users of financial statements can believe that the financial statements are more reliable. It increases the validity of the, it increases the reliance on the financial statements that is given by the management, right? And not only that, management can know where they are going wrong. Tax authorities can identify that the tax which is paid to them is correct. Internal control system of the company will be assumed to be strong if there are no misstatements. Otherwise, during the process of audit, if there are any flaws, it would be identified, right? So these are all the benefits of conducting the audit. Now listen, here another point is expectation gap. Remember this, the meaning. Okay, remember only the meaning. You need not remember all this information. Okay, this, just remember the meaning. See, expectation gap is what? Expectation gap is what the users assume about the auditor's responsibility and what really it is. Okay, generally users assume that auditor is responsible for preparing financial statements, but do you think that auditor will prepare? Auditor only will check the financial statements. Okay, and outsiders will imagine that auditors will detect all the frauds. Do you think that practically it is possible to detect all the frauds? No, it's not that all the frauds can be identified by the auditors. है ना? And they will also think, matlab, the users of financial statement will think that auditors has verified all the transactions. Do you think that verification of all transactions is possible? No. See, these are some of the beliefs in the mind of the users, but coming to the reality, that is not actually happening. So the gap between their expectations and the reality is called as expectation gap. Okay, remember this meaning. Remember this meaning. It is very important. Why? Because these are the basics. You should compulsorily remember it. Okay. Next, coming to the limitations of an audit. I have already discussed this all limitations. You need to remember this. Okay, you need to remember this. Okay, inherent. These are also called as what? Inherent limitations. Inherent limitations. This is important. Next, this all once you can go through it and you can leave it. Not that important. Okay, so all these topics. Only one reading. Okay, so or second category, not that important for exams. Okay, for the exams, the meaning of the assurance, and then about the elements of the assurance engagements, and then the four type of services I have said. Okay, audit engagement, review engagement, assurance engagement, and then other services. Okay, hope that you remember these four services. You need to have that understanding that what will happen in the audit engagement, what happens in review engagement, what happens in assurance engagement, and what happens in other services. Those are very important. This you can just skip it. Okay, once you read and you can skip it. We'll see if there are any other information that is useful. No. If you can remember these topics, it would be more than enough. Okay, so once again I'm telling what to remember in this chapter. First one is audit, meaning of audit, meaning of an assurance engagement, and then about the elements of an assurance engagement, that three-party agreement, subject matter, all that, five elements that we have discussed. And then comes this five types of services: review engagements, audit engagement, review engagement, assurance engagement, and other services. Have you all understood this? These four type of engagements that are undertaken by the practitioners or the accountant, what happens there? What type of opinions are expressed there? Where limited assurance is given and where reasonable assurance is given, where opinion is not at all given. You should remember these points. Okay, and I have also given the examples. Audit means audit of financial statements, assurance means remember the projected financial statements, and then review engagements means remember the listed companies filing their quarterly or half-yearly statements with the regulators, and then related services means remember compilation of financial statements or providing valuation services, and so on. Okay, so if you remember these examples, it would become very easy to identify the type of service from the MCQs. Particularly this would be given in the MCQs. So please follow this. And again, shall we revise once again? Tell me, reasonable assurance is given where? In case of audit. And in case of review engagements, limited assurance is given, which is less than the reasonable assurance. And then the assurance engagements, here also limited review is done, but here the opinion whatever is given will be limited than the review. At least in review we are having some historical financial statements, but in case of this assurance engagements we have future data. And remember here another one more point, in case of audit, remember, in case of audit, review and assurance, in these three cases we deal with historical data. Okay, and only with this assurance we deal with historical data. Matlab current year financial statements will be taken as the base for projection, right? So here historical data plus also future data is used, and here we don't verify any financial statements here. Okay, remember this. This also may be asked in the exam. Okay, but those two services where fully historical financial statements are involved is audit and review. Okay, audit and review fully we consider what? Historical data only. But whereas coming to assurance, there will be less historical data, means 1 year data will be historical data, balance data will be your future data. Okay, but here there is no data. Here data is prepared. Here data is prepared. Okay, so remember these points. So that's all about this chapter. Very small chapter, very tiny chapter. You give one reading. One reading it is enough. Give one reading, it is enough. Okay, primary focus is on the type of services, and then the elements of the assurance engagement, and then about the inherent limitations, and then about the benefits of the audit. Okay, these topics if you can remember, this chapter is complete. Don't invest more than half an hour on this chapter. Don't invest more than half an hour on this chapter for doing a revision. Okay, anyway, that's all for this video. Have a nice time. We'll meet in our next session. Okay, so I would request everyone to please share your comments. Okay, please share your comments so that it will be like a motivating factor for me to come up with more videos. Okay, uh, you can comment with the next chapter, which chapter should I start with, so that it will be very helpful for your revision. So if you mention in the comment box, then I would come up with those videos. Thank you so much. Have a nice day. Bye.